Hi everyone, just going to give us a few more moments whilst everyone trickles in. Love to see some note takers amongst the attendees as well. The age of AI is well and truly here, and not even sure the person's on the call themselves. Look at that. Awesome. So a few folks might be delayed a little bit, but we'll jump into it and yeah, get to it. So thank you all for joining. As you know, today we're going to be discussing how you can scale your organization without losing the financial integrity or financial control. So how can you retain that safety at the same time as scaling and hitting your growth goals? So my name is Matt. So I'm Chief Revenue Officer at Approval Max. I look after the sales and customer success and RevOps teams. I'm British Canadian, so if you struggle to place the accent, I'll just get ahead of the eight ball. So I grew up partially kind of London and then Hampshire and Manchester in the UK, and also in Charlottetown, PEI on the east coast of Canada. So I spent my time either side of the pond, and I'm currently based in Dubai. I'm joined with Azat. Azat, do you want to introduce yourself?
Thank you, Matt. Hi, everyone. It's a pleasure to be here. So, my name is Azat Ospanov. I'm the founder of Oscorp. We're a technological firm based in Montreal, specializing in financial system integration, cloud accounting, and technology implementation. So, we make sure to focus on helping organizations scale safely by implementing robust financial control and streamlining operations through technology.
Awesome. Delighted to have you here. Obviously, you know your stuff, CPA as well, which is great to see. So you can definitely speak to both the technology and the accounting side, which is awesome. Cool. We're going to bring a poll just to set the scene a little bit and understand a little bit more about the audience today. So that should be popping up on your screen shortly. There we go. So you can just take a moment to answer that. That would be appreciated, and I'll read out the responses. We'll give it another couple moments, and then we'll get into it. Actually, tell you what, whilst the poll is running, we'll get to the first question anyway. We'll multitask here a little bit. So, Azad, just to set the scene a little bit, financial controls, what do they mean? How do you define the term?
Mm-hmm. Oh no, definitely. And it's a very broad term that can encompass a lot of items, a lot of different areas. But if we try to narrow it down and start with the same definition to make the rest more pertinent, so what are financial controls? So it's processes and procedure that used to we put in place to manage, monitor, and regulate an organization financial resources to ensure accuracy, accountability, and compliance. So in the end, what if we go pragmatically, what it is? What do we have in place to make sure that the resources that we have are well used towards the objective of the organization to create value with those resources?
Awesome. And then, oh, sorry, Paul just came in. Oh, quite an even split. So, question was, where do you see the biggest gap in your current financial controls? Half of the answers were focused on manual errors and reconciliations, and there was an equal split across fraud detection and prevention, lack of audit trails and accountability, and approvals taking too long. So basically across the board. So all four of the above. I think we'll touch on hopefully all, but if not all, definitely most of those today. So hopefully it's a useful session for you. Thank you so much for filling in the poll. So, in terms of the scaling question as that, what would you say like the biggest risks are to a scaling organization? Like whether that's across, a single org who has multiple departments, or whether it's across like a multi-entity organization that has actual subsidiaries. What do you say the biggest risks are that they face?
Mhm. So, as the organization grows, what happens is that any weaknesses that we had in the beginning at an earlier stage, which was not apparent, what will happen is that as the organization grows, those weaknesses become more apparent, and the risk that the effect is way higher than from the beginning, because as the organization grows, initially we're more implicated in day-to-day management. We have more oversight on what's happening. So even if, let's say, we don't have the great controls in place, or we could not, it would not justify on the resources side cost versus advantage to put in those complex controls in place. What will happen is that as the organization grows, the more people are implicated, the less we're connected to what's happening on a day to day. So we have more things to manage. And then what happens is that those risks become more apparent, or even if they're not apparent, the potential of the risk is way higher than in the beginning. So there's four areas that we see, even if they can encompass a lot of items, depending on the organization, each of them has different realities. The four that we see the most often is going to be decentralized approval, compliance fragmentation, manual process, and lack of segregation of duty. So if we touch point on each of them, so decentralized approval, or that are not clearly defined, what happens is that initially when we start, or the organization is at different stage, it's more natural to have certain control in place, or informal controls where everybody's aware of what's happening. We can ask around us what's happening. But as the organization grows, it's important to put those into words, into documents, into processes, so it's easier to manage, because everything that is not documented will become an informal process, and this is usually where inefficiencies happen, and also the bottlenecks that result from those not clear approval process. After that, the compliance fragmentation. So then what happens also is that when the organization grows, when it deploys to different areas, to different regions, to different departments, we have more people within the organization that are working. And then what happens is that if we don't standardize those approval process, those workflows internally, each of them will have a natural life of their own. And it's not that they're not good, it's just that they're not standardized. It will make it more complex to audit those, to test the internal controls that are in place, and just will make it more complex to manage overall for the management. After that, the manual processes. So another situation that we often see, and what happens is that when an organization grows, there might be two different scenarios that will encompass most of the situation. So first of all, is the organization grows, they don't have clear process written down, so most of them become informal. The organization is able to function well, but we need to document the process and train the team on that. The other part, the other thing that might happen as well is where the organization grows, but their processes are very well documented, but they just don't have the tools to make them more efficient. They go through DocuSign with emails, so everything is very manual, very long to do, and also inputting the information in different software. So the data regarding those softwares, those workflows is what we would say static data. It's not dynamic. It's not moving from one place to another. That will reduce the risk of error. So this, well, what it does create is that creates inefficiency within the organization. So everybody is not optimized on their roles. And after that, also the lack of segregation of duty. So as I said, when the organization is at an earlier stage, we have a smaller team. Everybody is more connected, so we have more exposure to what is happening everywhere in the organization. But as the organization grows, the more people are implicated, the more organizational structure we must have, and the less we can see, and the risk of error regarding the segregation of duties will have more potential of happening, and the implication of those errors will have a bigger impact on financial resources. Not the same thing as when the management will be approving the payments to the supplier when it's a team of 5 to 10 people versus when it's a team of, I don't know, 20 to 50 to 100 persons. Then in that case, any weaknesses in the process will have an impact, direct impact on the resources. So it's not the same thing approving a $10 invoice that was there in a duplicate than a $100,000 invoice that was there in a double.
I think you touched on an interesting point there in terms of, I guess, the team expansion point, which I always think is interesting because it happens to all teams, happens at Approval Max as well, where a team expands and there's a couple of people who have all the knowledge and they know how things are done, but it's not documented. And then because it's not documented, it's kind of like the Chinese whispers effect, where the third or fourth person doing it is doing a variation of a theme, and then to your point, there's no consistency. You touched
Mhm.
on documenting the process, which I completely agree with. But taking it a step further, I'm going a little bit off piste here, but How often would you recommend people review the documented processes? 'Cause what I find is quite often people come up with these nice charts and they, color coded and they maybe use Miro or whatever software they're using for it. And then it kind of collects dust. So obviously, as we'll get onto later, softwares can help enforce that. But how often would you advise any of your clients to sit down and be like, okay, is this process still fit for purpose?
Hmm. So at the minimum, I think it should be at least a yearly process, because what happens is that we fall into the trap of, okay, we go to the process of document the process, we do it, we think we documented everything, and then the document stays there for 10, 20 years, or it can stay a long time. But what happens is that the organization does evolve with time. The realities change, the technology change, the workflows change as well. The situation, the clients will have different needs. So it's important to document, because what will happen is that if you do this exercise yearly, each time that you do it, the less time it will take to redocument and to see the situation that you have not seen. Because what happens is that even if you try to document, you cannot capture everything. So what we try to do with documentation is that to predict the risk. How can we avoid or reduce the risk of that situation happening? But then what happens is that every day we might predict, I don't know, 75% of the situation that might happen, but there's a 25% that will be on the spot. And when the staff are confronted with that situation, they cannot just say, okay, it's not documented, I cannot do anything. They'll still have to take a decision. But this is what are going to be the improvements on the next review. So what I would usually do is say, okay, when we have a new situation, let's just document it somewhere in a centralized place. And then at the next year review, we already know what we needs to be documented, because that's going to be something that I see often, even within organization that say we have a documented process. I would still go through it one last time, and that's where we usually capture those informal process that happens. That okay, we have this situation documented. Okay, but in that situation it did not apply. What did you do? Oh, I went to see person A because he was aware of that. He has lived through it. Okay, this is what we're doing. So it's not that we're trying to put a rigid environment in place. We're trying to take what is on the ground, what are we doing, and bring them to a documented process. So it will make it just easier for everybody as well.
Yeah, 100% makes sense. Shifting a little bit, but touching on the technology points that you've mentioned. So I think hopefully for everyone attending today, long gone are the days where you print something off, or sign it, fax it back in, all that kind of stuff, scan it up to this drive and have a big binder collecting dust in the corner for an approval. Hopefully everyone's using software of some sort across their entire stack. So, question for you, how's that? In terms of these risks of kind of the high growth with the financial controls element and wanting that security and that consistency, what software do you use, either yourselves or with clients or both, to mitigate those risks?
Definitely. So even and it's funny you're talking about the manual process that was done before. It's almost sometimes the same thing today, but with those software. It's just that the software are not integrated. So as the evolution happens within the software industry, recently the major change that happened is that those software can integrate between themselves and move the data from one another, and that's what we try to do. So the base software that usually we'll have is going to be QuickBook Online connected with, for example, Approval Max. We might have a payroll software. But in the end, when we assess the use of a software or the potential of it, we really try to look at, okay, how can efficient can it be for the organization? How can we reduce the manual entry within those software? So QuickBook complemented with Approval Max with a payroll software, this is going to be the base. But then each organization will also have different variation of other software that will be more particular to their organization, to their operation. For example, a construction company might use a construction project management software that will be connected to QuickBook and Approval Max. So even if we have multiple software, in the end, we try to aim for the same thing, which is have better controls internally. So for example, with Approval Max, it acts as a little bit as your digital gatekeeper. So we need to make sure that every transaction is approved, is reviewed, approved, and logged in, and we have the audit trail for it in the future. So it's a very powerful tool, but we have to be careful to not fall in the pitfall of trying to predict everything that can happen. So it's a cost versus advantage. What can we implement right away that is simple that will reduce the risk? In the end, we cannot control the risk at 100%. 90-95% might be a good starting point, or even lower than that, depending on the amount and the labor and the labor time that it will take to follow those process. So when we come in and we do the assessments initially with the organization, in the end, what we try to do is, no matter how the setup is or the time that we take is, we try to automate on a role-based workflows that will try to mirror your organizational structure. So that's why it's important to view the organization less of uh, a team that will work, but more of a role base. Okay, who is responsible for that? That will give clarity to management and to internal people as well, and will make it easier to set up the system. Because if we set it up on a role base, it's easier to adapt in the future. After that, ensuring that audit trail are documented as well, and automating them as much as possible. For example, we have someone that needs to request a purchase for a certain item. He will create a PO. You can send that PO with approval max, and then once the approval process go through, it might be a 1-step, 10-step approval process with certain threshold. In the end, what will happen is that it will move to QuickBook, and what we want is that when the auditor comes in the end, he can open the bill from the supplier, the PO that is attached to it, and then within the PO see the audit trail. And that's the nice thing, is that with approval max, anything that gets created will create an audit log that will be attached to the transaction within QuickBook or within approval max as well. After that, the integration of that of the platform. So that is very important. In the end, if we go to the base of what we do, everything that we do is basically a fight against clicks. So the clicks are becoming the new inefficiency within those software. So if we can have the same step done with 3 clicks less than the 10 clicks, on the long term, it does accumulate and makes it easier for the use and also the transfer of knowledge. After that, support of multi-entity, multi-department. So as I said in the beginning, what happened is that as the team grow and separate, each of them will have their own vision on how to apply certain workflows, certain processes, because they have the same goal in mind. But what we try to do is standardize it, so it makes it easier to see what's happening in different places, and at the same time, redundancy of information. Let's say, for example, we have one location. If we all follow the same process, then let's say we have one location that is short staffed, we can reach out to other location. We can ask them, oh, we're short staffed, can you help us out here? And it makes it more easy when it's the same fundamental workflows. So we can move around, we can have better success stories with that. So this is going to be the multi-department, multi-entity, and also maybe I can add on that. When we implement the softwares, the workflows, everything, we don't try to overcomplicate the work for the people internally. What do I mean by that? So depending on your role, you might not have the same request that you're doing within Approval Max. So let's say, for example, you're the purchaser. You go in, you're not doing approvals, you're not doing certain, for example, client creation. You're more concentrated on purchase order validation. Then in that case, when you log in, even if the Approval Max might have hundreds of workflows set up within it, when you log in, you're only going to see the 2 or 3 or 4 workflows that applies to your role. So it makes it easier for everybody as well. And after that, so with our experience, with the expertise that we have, we really try to tailor Approval Max to your needs. So really implementing your internal process, and also within multiple phases. We're not trying to go crazy from the beginning, trying to implement everything. It might be a multi-phase approach, because the organization needs to absorb the information, absorb the new processes. And this is one thing that we see a lot is 50%, let's say, of an engagement, the complexity will come from the operation and the businesses that operate, but another 50% is going to be change management. And this is something that is important to take slower, because if we want to go too fast, we might just be less efficient. But when we go slowly and we adapt in a 6-month and a 3-month period, we might implement the whole 3 phases right solidly from the beginning to the end. But when we try to go fast, that's where usually we lose people, and the reflex that we have is go back to our informal process.
On that, it's quite interesting, just kind of the 50-50 split, and taking a different 50-50 split. Let's say, prospective client comes into you presumably you see it all. The perfect, the good, the bad, dare I say it, the ugly. So at what point do you kind of do you know, or is there like an initial warning sign or like a crack or two where you're like, "Oh, okay, maybe this setup of financial controls and diligent scaling is not in place or like it's not working? Do you see any of those?
Oh, definitely, especially when the processes are very manual internally. So there's some organization, and that's the nice thing is that once we implement them, we still have to review them periodically. But what happens is that we might have organization that I don't know, they've been there since the 70s, the 80s. So the people that are working within it are set in their own ways. So it's important to understand what are the technological propensity to change of that organization. How easily can it be adopted? And in those cases, we're going to be either look at is it something that is useful for the organization as well? Because let's say they're working very well the way they are, we might wait for a new management change when the business is going to be sold or when the organization is going to change drastically within the management side and they're ready to approach that with new staff. Or also we're going to look at do we deploy it in a slower way? Because we might have clients that come in and they're very manual, but they're very technological. They understand exactly where they want to go in the end, and they're willing to change. But some of them won't be that ready. And a simple example that I usually give that will touch on the internal process side, where once I had a client reach out to me to change the whole system internally, so the accounting system, the approval, the payroll. The business was well run. They were maximizing the use of their current software, but when I asked the owner what was the objective in the future years, he wanted to sell the business within the next 3 years. So I didn't want to go through that process, going through all the change, and then it's going to complicate the life of that person. So I told them, okay, let's wait until new management comes on board, and then we can change the process because everything you're doing now, in the end, the information that you get, is it reliable? Is it accurate for business decision taking? If it is, okay, let's postpone it if we can. But sometime we need to implement it right away, and we'll go on a phase approach. That's why when we do the assessment initially, we have the ideally what we would like and what can we implement. So it might be a gradual evolution. So we might implement, okay, what are the most critical process that we need to implement right away? What the auditor has have seen? Then let's start with those, and we gradually add 1, 2 extra step every month. Then what happens is that without noticing it, after a few months, we have implemented the whole process with all the complexity that we wanted, but without the pressure of the change that we felt in the beginning.
I think that why is super important. Like, why is the person doing it? Why does the company need to do it? And I think tying it back to that's definitely going to be beneficial rather than changing it for the sake of changing it. I would imagine that's where you're going to get more pushback than buy-in. Speaking of implementation, so let's just double tap on that a little bit. So, typically, like, what does it look like? How involved is Oscorp, and how, yeah, what does the implementation process kind of look like from your perspective?
Mm, definitely. Okay, so the first step of the implementation, this is where we differentiate from other organization or competitors in our field, is that we're a team of accountants specialized in technology. We all share a passion for technology. So our approach in the beginning is a little bit more extensive because we want to capture the whole details of the organization, the whole pain points. What are the objectives? Because differently to other technology implementation companies, we do support you on the long term. So we want to be able to support you on the long term. So, and that means we need to capture everything that we can predict on the long term, the issues that might happen. I don't want to have a situation where the client reaches out and says, okay, we have not thought about that situation from the beginning, so we have to support it in the future. So we try to address it as much as possible from the beginning. And we start with pragmatically what is most critical, what is the less critical option, what do you have internally at the moment. So even when we do a cloud account system implementation just on the accounting side, I really need to understand the business, how it works, what is creating value, what is differentiating you from your competitors, what is your aim for the next few years. Everything will have an impact on that, the readiness of the people internally. So let's say, for example, we'll start with interviewing the management to understand how the process works. But the second step will validate that with the team internally. We need to make sure that we have the same view, and that's where also, just a side note on that, as a management, we might see that the organization works in a certain way, but this reality must be the same of the internal staff that are on the ground, that are making the operation happen. And the less disconnect we have, the easier it will make it to implement it. But at the same time, to notice some stuff that were becoming informal, make sure that everybody sees the same concern or issue within it. So usually, let's say the first step we'll have is, okay, management, what is the top 5 pain points that you see now? And I would ask the same question internally. So we need to make sure that we're all aligned and take the time to document it before even touching one software, doing first click of setup. Everything is already written down. So our approach is, let's understand it. It's a puzzle. We build the puzzle beforehand. Then once we figure it out, then we know exactly what to implement, and this is makes it easier than starting the implementation and going back and forth, because with the software it's a double-edged sword. It's very efficient, but it becomes very inefficient when we don't know where we're going.
I think that can also be applied to lots of things, right? You know, you can do top down and bottom up. So what does the management team or the sales manager or the founder or whoever think? And then what the people actually on the keys doing it day in, day out, how does that impact them? And it's interesting just to see how closely aligned or how far apart that is. And to your point, then kind of construct that puzzle in the middle to have the common ground to then build upon. So I think that's a very valuable nugget for everyone to take away. Cool. We got another poll which we're gonna spring, barring any technical glitch. So let's see if that comes up, and then we'll continue the discussion in the meantime. But we're asking, what's the biggest challenge that you are currently facing? There's four. Obviously, there's also another. So if you want to share in the chat, please ping it in. Also, if you have any questions, by the way, that you want Azat myself to answer, feel free to use the chat throughout the webinar. I should have said that at the top, but now you know. Let's take a couple moments and fill in that poll, and we'll see what challenge people are saying is the biggest one, although it is multiple choice, so you might be able to pick a few. Let's see. Awesome. So we're going to move on to fraud detection, which isn't listed there, but if it is your biggest challenge, say in the chat. So fraud's quite an interesting one because it's definitely on the rise, and I think lots of technology is now here to help it, which is great. But it's one of those always on things. So it's quite an interesting topic to discuss with people. So I'm keen to obviously hear your insights on this as that. But let's stick to the kind of proactive side of it. So how can organizations, when they're scaling, proactively prevent fraud? Because presumably, the bigger you scale, the more people, the more bills, the more POs, the more everything, the more that risk is inherently going to kind of bubble up a little bit. So, how can an organization proactively prevent against that?
So the first thing is, and as accountant, that's what we always learn is, and they hammer it in the courses is, we cannot prevent fraud. We can greatly reduce the risk of fraud, and this is by implementing good approval workflows, good systems in place, good information tracking. Because in the end, fraud and errors, where they thrive is in a complex environment. So we can look at. Just let's compare our legal system, where if you have something that is very clearly defined, a rule that cannot be interpreted in different ways, you'll have less potential to hire a lawyer and say, okay, we need to contest that. So it's the same thing within the organization. So we have two different things. One will be the spirit of the controls, and the other will be the specificities of each control. And so on the spirit side, what we're aiming to do as an organization, where do we build the value, what are the potential losses that might happen. So when we implement a segregation of duties, that might be just not only to because people have bad intention, but because risk of error are greater when we have the same person. So I'll give you an example. We had a case where a client was hacked by an external hacker. They went into the system, but what they did is that they did not take anything right away. They monitored every email within the organization for a period of 3 months, or even more, maybe 6 months. And they figured out all the controls that were in place and all the controls that were not in place. And while one of the vulnerabilities that they had is when a supplier has a new bank account, changes their banking information, they usually would send that to the accounting department, say, okay, for the next payment, please update your banking information. This is the new banking information. In their case, that was one control that they did not have in place because the accountant would receive it. It's something that might happen very a few times a year, often less than more, because most of the time organizations keep the same bank account. So they received the document. Everything was in a proper format for the from the supplier information with the header with all the documents. So they did change the information. They proceeded to the payment of that supplier. Then what happened is that after that they realized that it was the wrong email that came from the supplier. But because everything was fairly good in the format, and there was no approval process in there, because management would have said, okay, if we have someone requesting to change bank information, especially when we're sending hundreds and hundreds of thousands of dollars of money to that supplier, it's important to validate with the supplier. If we had a control in place where, okay, there's a banking information change, let's reach out to the supplier and confirm that with a voice call with their accountant, we would have avoided that situation. But because we didn't have it, and in the end, what happened is that they lost the money. But after that, we're able to look at the situation, what happened, and put a control in place. So that's why they thrive in complexity, because the more people we have, the more complexity we have, the more gray areas we have. And now hackers or frauders are adopting a different method where they're not going to try to steal a little bit of money right away. They're going to look at your organization, how it works. And we cannot prevent everything, but if they see that we have at least some segregation of duty, some internal process for important step of the internal process, for example, payment approval for suppliers, deposits that are done, it will greatly reduce that risk. Uh, and that's our differentiator, that we live through those, and we try to encompass most of the situation that we can have and reduce the risk. Of course, it's not going to eliminate it, but it will reduce it greatly, and it will dissuade the people from trying to take advantage of that.
Sounds like quite a sophisticated attack, that one you outlined, and it's interesting because it's quite a big range. I remember there was a story I heard this in the UK a couple of years ago now, but someone basically it was like a different bank account number, sorting code, and stuff, and the payment was misfired, of course, to this kind of new code for the supplier, and it went to this really small taxi company who then just closed the company, closed the account, and went off on holiday somewhere or to a jurisdiction that couldn't be found. And obviously, then person had the company who sent the money really showed to get it back, had to advise lawyers, and also that person who sent the money. I always feel bad for the person, like the individual involved, because okay, it sucks for the business and stuff. It's not ideal, but there's also the human element behind that, and like the stress it causes that person. So I think anything we can do to resolve that and kind of reduce that stress is super important.
Mhm.
Big pivot here, accounting tech. So obviously, for Max being part of the arena, so I always love asking this question. There's lots of change happening uh, globally, US, Canada, lots is happening. And I think lots is going to continue to happen each year with new features, new companies, new everything. So, for you personally, what are you most excited about the space? Let's say like a 4, 5 year horizon. What gets you excited about the accounting tech space and where it's moving to?
So definitely, and this might be a little bit cliche with everything that's happening, but definitely AI. So we see the evolution of AI, the way it's going, the improvement that's happening every day with that. The capability, there's some that we can predict, but there's a lot that that we're blindsided because we don't even consider the potential of doing certain data analytics that happen. So that's why it's important. What we're trying to do at the moment is that the AI potential functionality are not there fully, but we know that AI will require clean, structured data. This is what we try to build from the moment right away when we do an implementation, is try to categorize the data, try to structure it in a way when AI comes and we can start to analyze everything that happened within the historical transaction or the historical workflow from an organization. It will give us insight that we have not even considered yet because of the lack of time. Um, for example, document processing is becoming way faster because AI is learning. And the more we use AI or the new tools, the more efficient they become and the more potential they have as well. So I would definitely say the AI with all the potential, the integration as well in between those software uh, that it can do, it's amazing.
In a less eloquent way on the data side, kind of crap in, crap out. I remember I used to work at a forecasting and reporting tool, and I remember speaking to lots of CFOs, financial managers, accountants, bookkeepers, and it was always the same thing. Okay, this software makes the data look good. You have all these insights, and you got a three-way forecast, and best case, worst case scenario plotted for X amount of years. But if the data is wrong, it's a house of cards, right? The foundation of the house isn't there, and it's just not going to work. And I think the same approach can be taken as you're saying for AI. You need to make sure the data is good before you start really fully relying on it for that output. And I think it's just about doing the fundamentals right, which I think applies to lots of things, but certainly does apply to accounting and AI. Last question before we move on to some Q&A from the audience. If anyone does have any questions, please do throw them in the chat or the Q&A box. I'll dart between them and make sure we catch any that do come in. So, Azat, for the listeners today, if you just have to pick one single most important takeaway for them to take away from the session today, what would that be?
It would definitely be the documenting of the current process within an organization. So a lot of organization at the moment with technological change, the evolving in the software space, most of them will go in the next few years to a transition period within their own internal system. But we have kind of a cycle where in the last 20 years, a lot of organizations did not change their system, and that was okay because the system were powerful enough. But what will happen is that in the future, a lot of organization will go to the change. The change will be pushed by within the organization, but also the people working in that industry. So, just a simple example today, if you hire a bookkeeper, there's more chance that he'll know how QuickBook works than, for example, 10, 15 years ago. And the more it evolves, the easier the tool become, the more natural the change will become. So, to prepare that change, even if you do it in a 3 year period, in 5 years, uh, documenting, predicting it as much as possible right away. So understanding, okay, what are my process? How do I work? What are the pain points? So when you come into those calls and to those exploratory, and definitely exploring different businesses that offer that service, obtaining different proposal to make sure, okay, do they understand what I want? And each of them will have different specialization, different points of view on your need. It's important to understand both, but to be able to have effective calls with those future suppliers is to understand as well the organization as you understand it. So we all have a perception of how we see it today, but also going through that exercise on the allocated time or periodically, it will make it easier for the future. So you'll be more ready to answer the question that will come to you, but at the same time, you'll see what you want, what is the most important and what is the least important. And already, so when you come prepared, it will just make the rest easier and you'll understand exactly what the other developers or implementers are doing on their side.
Nice. So, yeah, grab a big coffee if you want and start documenting. Awesome system. Info on the screen just before we jump to the Q&A. So if anyone wants to hear more about Oscorp, feel free to obviously visit their website. There's an email there too. I'm sure you can track Asset down on LinkedIn as well. And there's also obviously Approval Max if you want to hear more about us. You can go to the website. It's a free trial. You can test it all out and see financial controls live and in the flesh for you. And also feel free to reach out to me, email, LinkedIn, anything that you may need or any questions that you have. Awesome. So I think there's one or two questions that have come in, quite a bunch here today. But the first one is for you, Azat. So kind of what does Oscorp do differently, I guess, than a traditional accountant in this regard?
hmm Definitely. So the thing that will mostly differentiate us is going to be the technology readiness or the implementation. So within Oscorp, we're all accountants, but we share a passion for technology. And the differentiator is that when we go in an implementation engagement, onboarding project with a client, we understand what is the end result that we want. So we, when we do the implementation, each process, each step, each software that we do, we have in mind what is the result that we want. Because in the end, everything that we're doing is to obtain and collect accurate financial data for business decision taking. So, for example, if we're trying to implement something that has a minimal impact on the financial data, minimal impact on the information or the reporting that will be useful for decision taking, it's not that useful to do it right away. So this is what will differentiate, and also the future support of it as well. So most of the time, what will happen is that technological companies will be great at implementing technology, but less on the accounting side, and accountants will be great on the financial information, but less on the technology. What we try to do is bring those both together and be your partner of choice for the implementation, but also the support of it. And one thing that happens often is that it's not only the implementation that we do, it's also the support that we offer and evolving with the organization life. So when we do, for example, the first year implementation, and the support is going to be very different from in the 3 years in the next 3 years, because the organization will evolve. You'll have new situation, you'll have new needs that you'll need to cover, and this is where we can come in and help you. So on the implementation of the technology, supporting on the technology side, but as well on the financial information, we will try to understand, okay, what is your reporting need? Can we build custom financial dashboards for you? Can you help you analyze that data? Do we need to separate the information to be able to track per location? So all those questions, we're used to it, and that's what we try to do from the beginning.
Awesome. We've got another question that's coming from Jessica. I actually love this question because I think it's such a recurring like question for the community. So, question is recommendations on how to stay on top of new and or best tools in accounting technology. I've got a lot of thoughts on this, but Azad, do you want to take a first stab at it?
Oh, definitely. And that's something that is a challenge for the clients, and as well for the actors in that industry. So ourselves, that's one thing we see every day. A new software comes out, a new potential player in the market, and in each space, the fintech has become very popular in the last years. So we might have different uh, uh, software, different solution for the same problem. In the end, it's going to be what is the most useful for you. So what is the most pressing issue? And then one of the nice thing with the cloud technology is compared to an ERP. So when we go and decide to change with an ERP, the ERP basically they're all white labeled and the behind, but in the behind it's still different software that are connected together. So it makes it seamless for you when you do log in to different team members. But then one of the things that is a weakness is that if there's a part of it that you don't like, you're stuck with it, because it's a whole system built in. And there's definitely a need for those ERP software for certain organization, but most of them or some of them they don't need all the functionalities of that software. So it's going to be more concise on their particular need, and we build that architecture together. We build those different softwares and integrate them together. But if we don't like one, or we see that one is not functioning optimally, or there's another one that came out that is able to answer those needs way better, we can change it. We just need to integrate it with the new software, and that's what the new cloud accounting technology allows us to do. We can choose the best one without changing the whole system. For example, we have a payment processor that we use with our system that is connected to QuickBook, to Approval Max, to payroll software. But then tomorrow there's a new one that comes on the market that is cheaper but also better. Let's say, for example, in the best situation, then we can just change that payment processor instead of changing the whole system. So to stay on top is definitely the best way I would do it is select one software, per week or per month, and just look at it, and also ask questions to your supplier, to your accountant around you as well. Sometimes there's software that we don't hear uh, uh, way before we don't hear before they become very popular because the industry specific are adopting it right away. So the local industry community, the industry community online for your particular organization or your particular needs, and also going to research it on the need side. But this is something that we can also help you on making sure which one to choose, and we're going to compare multiple of them, and we do the choice together.
Also, add a couple of additional points. Again, I do love this question. I think for new tools, I'm always a little bit more skeptical. Just because are they going to stick around for long? How are they funded? Is it kind of a venture-backed thing which isn't profitable yet? Um, we saw bench accounting unfortunately go through a bit of a crazy period right around Christmas last year, which left a lot of people in the lurch. So I think seeing new tools but understanding it through that lens and not falling for like a shiny object syndrome is quite important just to make sure you're not signing up to something and then having to switch again because I think switching cost even though it's a lot easier with cloud accounting as it says it's still the switching cost, there's still the process that needs to be adapted, there's the training for the team, etc. So be a little bit wary of that. In terms of best tools, that's quite an interesting one. Obviously, webinars, such as this one, but maybe even broader with a more apps presenting almost. There's some webinars like that every now and then can be quite interesting just to get a bit of a flavor of what everyone's doing. You can obviously take out free trials like our free trial. And I always advise people to really put a lot of pressure on the kind of sales and support team during that free trial to see if they actually help you with your business case, like your pain point and stuff, not just, hey, but buy here no matter what, and then kind of leave you in the lurch. And I also say network with peers. Quite a lot of other peers that you will know will have similar tech stacks, similar problems, similar pain points. A lot of like Facebook groups, LinkedIn groups, Reddit threads and stuff as well. So I'll definitely lean on what other people are using and get recommendations where you can. And as it says, if you can, find the time to periodically pick some other apps to see whether they're a good fit for you or not, that's also quite interesting. And the final thing I'd say is just because you find a good tool today doesn't mean it's a good tool in a year. So where are they building towards? What are the software updates that they're adding? And is that actually building and helping your business or your clients or whatever? Or is it just something else which you're not necessarily gonna use and they're building for a different persona? Because that's probably something where I'd be like, okay, is this really the best software for me? Or are they actually addressing that pain point still? So something to bear in mind, which actually, funny enough, goes back to process and reviewing process, reviewing tech stack can probably be part of that as well. Awesome. And I think that's all that's come in the Q&A. But thank you everyone for joining. Really appreciate your time. Thanks, Asad, for parting with your wisdom. Really appreciate that. And definitely some key takeaways and nuggets for the audience today. If anyone has any questions, please do reach out to all of us. Happy to help out and explore any of these topics further. And again, feel free to check out the Oscorp and the Approval Max website for more details about the services that both of them provide. But thank you very much, and I hope you have a great rest of your Monday. Thanks, Azza.
Thank you. Thank you, Matt. Thank you, everybody.